GameStop was already running when people piled into options last year. It was already going up. Volatility was spiked. It was going to the moon, right? Hold on. And then it went up and it peaked, but people piled in here when they were expensive. And so they didn't buy options very far out. It's not like they were buying April calls, some were, but most weren't, right? It was Wall Street bets. They were buying weeklies. They were buying cheap options and maximizing leverage in order to capture gains on a short-term basis. On the 29th, the vast majority of those call contracts were closed. The SEC data corroborates that. As soon as those options were closed, they no longer had to hedge that delta. They were able to bring the price back down to $40 over the course of the next month until they ran into the February OPEC settlement and the massive amount of FTDs generated from creating liquidity for this event, which then drove us back up to $350. This isn't a thesis per se. This is just the data. You mentioned you like to buy two options at the same strike and use one to exercise the other. When MOASS starts, why not just wait until the share price hits 2,000 and cashless exercise them all to receive more shares total? So thank you. I will. If MOASS kicks off, that's exactly what I'll do. But if we, fail a test of 250 or 350, I am going to capture the profits from those out of the money calls. And then I can use those profits to exercise my in the money calls.